are online. We are online. Let's go. Okay. Okay. Yeah. Let me find my other sounds.
Vegas Life Radio. Vegas Life Radio.
Oh my God. What else we got over here? What else?
The rest of it's like old school rock and roll for AM radio.
Oh, that's what oh. Oh. Okay, so I got that and that. Oh, what? No, I don't want that bad. No.
Vegas Life Radio.
That's what this is. Let's go. Alright. Boom, 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 boom. Oh, I gotta post this. That's what I gotta do. I gotta post this live right here. Put this all the way over here.
You want to just put that up for right now just to see what it looks like?
That's a good idea. I gotta. Oh, it's gotta be live. Is it live? Is it live? Public. It is public. Oh yeah, there it is. Yeah. Other sounds up.
Vegas Life Radio. Vegas Life Radio.
You glad to be behind the board there, bud?
Vegas Life Radio.
I should have never gave me control of this. What?
Vegas Life Radio.
Sending out a mass text. Tune in, everybody tune in.
All right, I just
tune in.
sent you the.
We are live. We are live.
Oh shit! I didn't attach it. What the? Hang on. Ignore that email.
It is ignored. Boom, 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 boom. Call now. Let's go. Call in. It's my number. Put you live. Put you live on air. Pow, 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 pow. Go ahead and put you live on air. Go ahead and put you live on air. Yeah, we go ahead and put you live on air. We don't care how. Oh, whoa.
Vegas Life Radio.
Whoa, that's us. Vegas Live Radio. You know what it is. Chris Cash, Jalem here, and Kevin Sherba.
GFL Capital.
Oh, GFL Capital Mortgage.
Vegas Life Radio.
Yes. We are doing mortgages live,
Real
pre-qualification.
estate live.
Real estate live on air, because that's what we do. It's Vegas Live Radio, and what makes more sense to sell real estate or get people in homes, because that is Vegas Life. That's the Vegas Life to the core. That's the base.
We're helping them live Vegas life.
Live the Vegas life. We are helping you live the Vegas life. Do you guys understand that? I don't think you guys really understand that. And then, all the other fun stuff too. We'll talk about that as well, But most importantly, you got to own your land. You got to own the land underneath you, the buildings around you, your day to day where you lay your head. You got to own that. If you don't own that, how you going to say Vegas life? I can say Vegas life. I can say it. I really could say it. So yeah, people could call in, get pre-approved or pre-qualified. Excuse me. We went over that yesterday.
Yep. Pre-qual, and then we'll pre-approve if it looks good.
Yeah. Pre-qualify to see where we're at in the ball game. So yeah, you could call in at 702-505-3297. We could take your call live on air, and we can get you pre-qualified live on air. What a wonderful thing.
Right.
Technology, man. Like, I'm telling you, technology is amazing. You could do a lot of things through technology. And then you could also do this.
Vegas Life Radio.
Yeah.
You got that email?
Yes.
Hooks you up with the banner.
The banner.
Vegas Life Radio.
And then, the link for people that don't want to call in can, once we get it in there, we'll have an apply now link in the description below. That's for people that are for sure going to be buying. They can just apply now, upload their docs. We can take a look at it, do a full pre-approval at that point.
Yes.
But if you want to just talk about your goals and what you're planning to do and what you're looking for, see if you can qualify just on a pre-qual conversation first. Call us.
Yeah, we could definitely make that happen over here on
Vegas Life Radio.
Yeah, definitely gonna make that happen. Yes. Oh, see, I'm just learning the board right now. Just getting it right, getting it tight. All right, now I gotta do some editing real quick. Hold on. Gotta put this in there. Let's see. Image. Next image. Where is it? this thing in the corner, right? Desktop downloads. Boom. Okay. So on your card it says wholesale mortgage specialist. Can you explain to me what that is?
Wholesale versus retail mortgage.
Yeah, I don't. Yeah.
So retail is like your bank, credit union, or big mortgage companies that you hear about, like, Rocket,
That's retail.
Loan
Rocket.
Depot.
Rocket is.
The big companies that you hear out there are retail.
Okay.
Which means they have one set of guidelines, one set of programs. Their underwriting is, it's a box. You fit into their box, then you can do business with that lender, that retail lender. Wholesale is, we work with multiple lenders at one time.
Okay.
And so we actually lend right now through 65 different lending organizations.
Oh, wow.
So that's the difference with wholesale lending is you're not stuck with one box. If you don't fit into this lender's box, we have 65 other ones we can check, or 64. So that's what wholesale means.
What would be the advantages and disadvantages compared to a retail?
So your advantage is if you fit into a retail box, typically retail, like I said, is going to be those bigger box companies or banks, which they got more overhead, right? More overhead means that you're going to be slightly paying higher on your mortgage pricing, rate and fees usually.
Yeah.
And if you're not what we consider a cookie cutter client, that an easy transaction like we talked about yesterday, W-2, pay stub, fitting perfectly into the guidelines, then you can go elsewhere.
Yeah. I know you said yesterday, and we may have to reiterate stuff from yesterday, just because
we got new viewers.
Yeah,
gotta redo it.
Gotta redo. You gotta redo that. So yesterday we also talked about what else did we talk about? I forgot already.
We'll just recap it. It's fine.
Yeah. Oh yeah. Recap
the importance of getting pre-approved.
Yes.
Or pre-qualified. Having a plan.
Right.
Making sure you have a plan. We talked about the benefit of buying versus renting. If you are buying a home, you're building equity.
Okay.
And you're not throwing away all your money on rent.
How about let's start with this. Let's start again with the difference between a pre-qualification and a pre-approval.
So pre-qual is going to be a conversation.
Okay.
So we talked about yesterday is that when you're getting pre-qualified or you get a pre-qual letter, typically that means you've talked to a loan officer. They've asked you what your income is. They've asked you how much money you have in your account. And then you tell them, and they work up based off of your verbal conversation what you might be able to qualify for. Pre-approval is you've filled out an application, you've submitted your documents to the lender. They've actually pre-underwrote all of your, they listened to what you said on your application, but then they also had the documents to back it up, your pay stubs, your bank statements, your credit report, to make sure that when they send it to underwriting, it's going to be approved. And that's what a pre-approval is.
So pre-approval is the actual documents being sent in
and being underwritten.
Okay, so what is underwriting?
So underwriting is the act of looking at an application and verifying the information with additional documentation, right?
Okay.
So if someone says I make, $50,000 a year, we're going to say that's awesome. That's like a pre-qual step, right? And then to pre-approve it, the loan officer is going to look at their pay stubs and their W-2s to make sure that what's on the application makes sense, and we'll go through underwriting without a problem.
Okay. So the underwriting is what's it called? The confirmation, basically.
Yep. Confirming that what you put on your application is true and correct.
Okay.
And that it fits guidelines for whatever lender you're going to.
Do those guidelines always change?
Yeah, depending on the products. I mean, guidelines change depending on the products pretty often, depending on the market. Fannie Mae and Freddie Mac, as far as conventional loans, they change their guidelines probably once or twice a year.
Oh, okay.
Sometimes in a difficult market like during COVID, it was a lot more often. But we have a lot of non-QM products as well. Those change all the time. So that would be like if you don't qualify for conventional, or you need a bank statement loan, or you have rough credit history, whatever the case may be. There's always new programs coming out with new guidelines.
So what is a bank statement loan?
So a bank statement loan usually used for like investors or self-employed people.
Okay. Oh yeah, like Michael yesterday.
Yeah.
Yeah.
So if you're self-employed and you're filing taxes, you want to write off absolutely everything, right?
Yeah.
Well, when you're qualifying conventionally or trying to do a conventional loan or an FHA loan with self-employed, they're going to use the net income after all your write-offs.
Okay.
So if you made $100,000 as a self-employed individual and then you had, $90,000 in write-offs, then it showed you only made $10,000 adjustable gross profit, right?
Which is good for you for taxes, but bad
not
for
good
you
for
when you want to get a loan.
Yeah, because they're like, okay, well then we're going to give you credit for $10,000 that you made for the year. That's not going to qualify for much, right?
Wow.
Nothing.
Wow.
So in that case, that person can do a bank statement product.
Oh,
And
okay.
what that does is you submit either 12 or 24 months business bank statements, or even personal bank statements. They have that product now.
Oh, really?
if
So you
you're
can use your
self-employed.
personal bank statements.
If you're self-employed, yeah.
Yeah, absolutely.
You can basically, what they do is all the lenders are different, but they'll take all of your deposits that you made into those accounts over the last 12 to 24 months, and then hit you for a expense factor.
Okay.
Some lenders are 50%. Whatever your deposits were, they'll just cut it in half and call that your income. Some are less, 25%. Some don't have an expense factor. If you have a CPA letter that you supply them and your CPA says that your business is cost free, it doesn't cost to run your business.
Like a consulting,
Right.
Something like that, right?
Exactly. If there's not reoccurring business expenses.
So you would need that from a CPA.
Yeah, they're not going to just trust your word on it.
Right. No, I know there was liar loans back in the day, so I don't know. You gotta ask these questions.
That's a call full doc or bank statement doc. Right?
Okay. And then how do they verify the business? Like, because you said it's personal account, right? Like you could count how do they verify the business?
So verifying the business is in
the CPA,
right? They either do a CPA letter that they're in business, a business license. They can do a Secretary of State lookup to make sure that you're doing business as you say you are.
Yeah, just as long as you have the license documentations of the business,
right?
And your CPA. Is that the business owner's CPA, or do they have a separate CPA?
No, yeah, the business owner's CPA.
Okay.
Tax preparer.
Yeah.
Someone who's done business with you. They're going to trust that person because they know that person's doing your taxes for your company, right?
Oh, okay. So the tax preparer, not necessarily the CPA, because you could have the CPA
typically
in the business.
It depends.
Okay.
Some people want you to have an actual CPA.
Okay.
Some lenders require that because it gives then they have a license that's kind of tying them to what they're saying.
Okay.
Right. So that's trusted a little more than like a tax preparer.
Yeah.
But it's not always required.
Okay. Yeah, I'm just getting ideas because I know a lot of business people are out there, and just you got to build your team of people that you want to work with to be able to do the things you want to do.
So for instance, like real estate agents, right? They can write off stuff, but mileage on the car and stuff like that, or if they are paying for marketing. But if it's a situation where it's all referral and they're doing a whole bunch of listings, they may not have a whole bunch of write-offs. And their real estate license showing that they've been a licensed realtor for how many ever years would be verification of their business.
Oh, okay. Let's rewind this because it hits home for me, a real estate agent.
Right.
So you're saying just having my license is already the verification.
That's a business license. You're licensed to do real estate.
I thought I had to get like another license.
If you wanted to do an LLC, then you could do that, but it's not required for the bank statement doc loan.
Okay, so let's say. Wait, would it be a bank? It would be a bank statement doc loan for a real estate agent, right?
Or if they showed enough on their tax return, then it doesn't have to be.
Okay.
The benefit of going full doc and showing your tax return is you're going to be able to do a conventional loan. Okay. Which is going to be, you can do 3% down as a first-time home buyer. It's not going to have the higher interest rates that are typically apparent on non-QM products or bank statement loans. Bank statement loans is an additional risk for that lender to take on that client. Right. Because you're not showing them your tax return. Yeah. You're showing them bank statements. They don't know really. I mean, they don't really know what your expenses are or what you wrote off, right?
Yeah.
So they're taking an additional risk. So
Okay.
those loans come at a higher cost.
So a better loan would be the W2.
Conventional full doc. Yeah.
Full doc. So a conventional full doc loan that's when they look at your tax returns.
Yep.
Right.
That's how they document income on a full doc loan.
Okay.
Yeah, for self-employed.
Yeah. And then as a real estate agent, like I haven't been in a year in real estate, so whatever I make through that's going to be on my W-2s, right?
Are you W-2'd or 1099?
I don't know. That's weird.
So, as you're new in the business, you'll know soon.
I'm very new. How would I?
Your broker is going to either send you a 1099 or a W-2,
No.
depending on what what you made in the year. So, you'll know soon enough.
Yeah.
Hopefully, very soon. Give us a call.
I'm gonna call in to get pre-qualified.
Well, you actually had a client today calling from Zillow, right?
Yeah, absolutely.
And you're going to be showing property tomorrow, right?
Yes.
So you're still working. You're working out there.
Yeah.
Something that we can also do. I know that you've put in a lot of effort on getting this live out there for everybody to know that they can call and get pre-approved.
Yeah.
Something that you can do for call-ins is showing them what's out there in the market.
Absolutely.
You can pull up MLS. If they want to set up appointments, depending on your schedule this weekend, I'm sure if someone called in and said, "Hey, I want to go look at properties," you'd be like, "All right, what do you want to look at?"
Yeah, yeah. But I noticed just in this business that I'm just learning right now.
Right.
I can't do anything with you guys if you guys don't get pre-qualified. I mean pre-approved.
Right.
Because I've been lately showing people homes and stuff like that, and then when it comes down, and then we find something, and then now we still got to go through the process of getting pre-approved. And then now I'm losing
time
and effort, and then now when we're going through that process of getting pre-approved, the property can no longer be there no more.
Right.
You know what I mean?
And with some of my realtor partners that I work with in Vegas is sometimes depending on the conversation that I have with a client, maybe I do a pre-qual conversation, right? If that client tells me they make good amount of money on W-2. I can go over like what they think their debts are. If I think that client has a good grasp on their own situation, then I can tell my realtor, "Hey, you're safe to go look at properties."
Oh, yeah.
They're going to get qualified, right?
That's a very important
based
thing.
off that pre-qual conversation. If I have a client where they're like, "I'm not sure, I have maybe some credit issues or something like that," you might want to wait till they get fully pre-approved before you take them out to look at homes. But that's obviously up to the realtor.
Yeah.
You know.
So as the realtor, I'm filtering everybody that's financing. I'm filtering everybody through GFL Capital Mortgage.
Right.
That
saves you time.
Absolutely. No.
And what's good about that is that, like we talked about yesterday, for people that may have not tuned in, but is that even if they're not qualified, right? I have a pre-qual conversation with somebody and they say, "I definitely have credit problems. I definitely have income problems, or I don't have enough money for a down payment," right? Our next step is to put them on a plan.
Yeah, that's a great thing about this is because it's all about a plan. Because otherwise, people will get discouraged that they're not in the position that they're in, and then they just stop automatically. You need a plan, right?
Exactly. And when you like if you were to say send a client my way, and they don't qualify, we're going to put them on a 3, 6, 9, 12, whatever it takes plan to get them to where they need to be. Yeah. If they follow those steps, that's the other part.
Yeah.
They got to be willing to follow the steps. Right.
Let me ask you this. Do you guys kind of are like guiding them with that plan? Is it like a set thing to where it's like, I'm going to call back to just check in and just see?
We usually do like if let's say someone's on a 12-month plan, right? We're going to call back and check in every 3 months. Just to say, okay, how's it going? Did you pay off those collections? Did you pay down your credit cards?
Right.
Whatever the case may be, whatever steps were in that plan, we're gonna call and check in. Yeah.
So with all this, is this an additional fee that you guys charge? Because you guys are essentially financially planning, right? Like as a
we can't say that because we don't have a license for that. But and we're not credit repair either. But although we give them tips to repair their own credit.
Oh, right.
But we don't charge anything for it.
Yeah, because
if there's somebody that's having trouble with their credit, right? And this just changed recently. Credit prices for credit reports, prices for soft pulls, has gone up like triple. And so now we do allow them to pay for their soft pull, rather than us paying for it, because it used to be $30.
Right.
Now it's like $70,
Oh wow.
$80.
Yeah. Just,
So-
just the full year. Yeah.
So it gets expensive when we're offering that for free all the time. We will give people free advice. Like if they call in for a pre-qual, they don't qualify. They know maybe they have their own credit monitoring service. A lot of people use those phone apps, and they have copies of their own credit report. We can take a look at that for free for them.
Right. Okay.
But once it gets to a point where, they want us to look at it to kind of see how to build their credit, stuff like that, we'll send them a link so they can order their own. Okay. And then we'll work with it and look at what steps they need to take to improve it.
Okay. So to kind of recap that, so basically the same things that a credit repair advertises and market that they charge, credit repair.
It's a little different. Credit repair companies out there, they actually go and they actually go and do the work for you to reach out to the bureaus. Oh, okay. To fight,
you guys are just advising.
Exactly. We're telling the client that they can do that on their own.
On their own, right. Okay.
If they're willing to do a little bit of research, they can learn how to do that on their own.
Right.
Everybody should know out there that your credit is in your hands. Like you don't have to pay anybody to fix it.
Okay.
Everybody's got Google, right? Yeah. You just Google it up. How do I fix my credit?
YouTube, Google.
There's a bunch of YouTube videos. I see them all the time.
Yeah.
About there's a guy on there that's like, if you have a collection, don't pay it. If they can't provide you 1, 2, 3, or 4 pieces of information.
I heard about that. Yeah.
Right? You've seen it, I'm sure.
Well, no, I haven't seen it, but I heard about that. Like if you have a collection,
right?
Don't pay it because after like 7 years or so.
Well, okay, if you want to wait that long. But,
no, I'm just saying. I mean,
yeah, it'll drop off if you just wait. If you wait it out, but the better option is to fight it yourself.
Yeah,
if you can. Basically, from what I know about it, is that they have to provide a payment history from the previous creditor. They have to provide your signature showing where you signed on the contract that you were supposed to repay it. All these things that the credit repair companies know to go ask for. And sometimes it'll get expunged off your credit because they can't provide the collection agencies if they bought that collection from a creditor, right, and the creditor didn't have the records or can't provide them or whatever the case in a certain amount of time, then you have a case to say, well, then how do you legitimize this collection, right?
Yeah.
But if you are, let's say that doesn't work. Let's say the creditor has all of that stuff, and they're able to provide it, and the collection stands on your credit. What we tell clients, especially if they know they owed it, right? Yeah. The main thing is that if a client knows they owe it, right, we're not going to tell them not to pay it. If they say, oh yeah, I didn't want to pay it, I got mad at somebody, or I just couldn't pay it on it. Most of the people, they say, I was struggling at the time. Yeah. I stopped paying that card. Maybe it's $2,000 or something, right? Right. Well, and then they come to ask us, and they want to spend $15,000 on a down payment. Wow. Okay. And their credit is bad because of that collection. Yeah. Well, then it's like, okay, you have $15,000. You just told me you had $15,000.
Take care of
just take care of that. Yeah. Your credit's going to jump up this amount. So what we do is a soft pull, and then we can do a what if simulator. So like, what if they paid off this collection and it disappeared off their credit? What's that going to do to their score? We can actually kind of tell them what their score will go to once that's fixed.
Typically, what would jump the score up the most?
Well, it depends. Depends on what the problem on the credit is.
Let's just say it has an outstanding amount, I guess, right?
Okay, so an outstanding collection?
Yeah.
So the best option for that is to pay it in full.
Okay.
Talk to the collection company and do that in exchange for a deletion letter.
Ah, okay.
Not a paid collection. So there's a difference. Oh, so when you have a collection, let's say you have a collection of $2,000.
This is important, right?
And you owed the money. You just couldn't pay it at the time. And then just forgot about it, and you thought, okay, it's not going to affect me that bad. And then you find out it did affect you pretty bad. Okay. And now it's preventing you from buying a home, right? Then we're going to tell that client, okay, if this was to be deleted off your credit goes from 580 to 700.
It can, it can jump like that, really?
It depends on what's on there, yeah.
Oh, wow. But that's a possibility that it could jump that high.
Yeah. Oh, so if that's the case, then we advise them to reach out to their collection agency, the one that has the collection, and ask them, if I pay this in full, can I get a deletion letter? And or what would allow me to get a deletion letter, right?
So that's a specific term, the deletion letter, because
Yeah.
otherwise what's
Otherwise, it becomes a paid collection,
so not
which is a little better. You might go from 580 to
but
600.
deletion is a lot better.
Well, deletion, it just disappears like it was never there.
See, this is great information because a lot of people don't even know. They'll be like, yeah, I paid it off, so blah, blah, blah. But if you get it deleted,
Then it's just never there.
it's never there.
Yeah.
And then you can actually negotiate. You can call and
You can say, what's it going to cost me to get a deletion letter, right?
yeah.
So you got to be kind of savvy,
Yeah.
and you're doing it on your own.
Yeah.
Again, we tell people that they can do this. We don't
Yeah.
advise them on how to do it,
Right.
because it's up to them.
Yeah.
You know, we're not credit repair people.
Yeah. Do people just be like, yeah, okay, well, then you're just not gonna get your money? like they'd be like, can you delete this?
No. I mean, they could do whatever they want, right? But
Well, then I'm just not gonna pay. Then
We've just
I
seen-
haven't been paying it in an X amount of time, so
and they can do that. That's fine.
Right,
And then it might take them 10 years to buy a house. You know,
right.
like you were mentioning. Yeah,
Yeah.
you could wait for it to drop off.
Yeah.
Or charge off and then disappear from your credit. Which,
So, but that is a thing. It's like after a certain amount of time, it just kind of
Yeah.
just charges off, right?
I think it's 10 years now.
It's
It used
10
to be
years now?
7,
Oh, okay.
but now it's 10.
Okay.
Everything on your credit stays on there for 10 years.
Yeah.
Any derogatories.
Yeah.
But yeah. And then the other thing is that so that's collections, right?
Okay. Yeah.
The other thing that affects people's credit is length of time they've had credit.
Oh, okay.
So a lot of people have the misconception that, okay, hey, I got a whole bunch of money somehow, right?
Mm-hmm.
And I'm going to fix my credit now. Now I care about credit.
Right.
I jacked up all my credit cards. I was paying the minimum payments forever.
Yeah.
I got a whole bunch of money. Maybe I got some inheritance or whatever the case may be,
Uh-huh.
right? Got a bonus. I'm ready to clean up my credit. And I don't want to get into debt again. So
Mm-hmm.
people automatically think that, hey, I'm just going to pay all these accounts off and then I'm going to close them. That's the worst thing you can
Oh, you got to keep them open. Can you keep them open?
Yes.
And then just
do. Zero balance.
Zero balance.
Yep.
But you got to get the credit cards that don't charge you any annual fees, right, or something like that.
I mean, even if they did, wouldn't it make sense to keep it if it's going to keep your credit high? It's kind of like
Yeah.
you're paying for a good credit score.
Yeah.
So if you have an annual expense on a card,
Uh-huh.
you could have us, or we could send you a link. You could do a what if scenario, and then we could show you, okay, what if you closed it?
Oh.
And what if you kept it open? Is it worth it for you to have a 780 score or a 720
Right.
score, right?
Wow. Oh,
So-
so that's another service you guys provide is
The what if simulator.
The what if simulator.
Yeah.
Oh, and then people could just kind of figure out what if they do
What
this
if they
and-
do this? What's it going to do to their score? Yeah.
to get their score up.
Yeah.
That's cool. Okay, so another question I wanted to ask too, was I heard about this, like, so if I wanted to buy a multiplex, I heard that you can actually take the income that you would be making from the other tenants
Right.
and use that for your loan.
Yep.
How does that work? What
So
is
you're
that
saying
called?
like if you bought like a
So if I wanted to buy
a 4-unit
yeah,
and you lived in one of the units,
and I would have to live in one of the units, right, for this to work, or
not necessarily.
okay, well let's do
I mean, like rental property, if you buy a single home for
Uh-huh.
just a rental,
yeah,
right, the tenant's going to pay your mortgage
yeah, okay,
with
so
rent.
so let's say I buy it.
But you're talking about how do I have a primary residence that other people are paying for, right?
So I'm talking about basically I want to buy a multiplex, and then if I have to live in it or if I don't have to live in it, like what are the what if situations?
You don't have to live in it.
Oh,
I mean, it could just be. I mean, if you don't need to live in it.
okay. So
If you're saying you want to get rid of your house payment,
mm-hmm.
rent or otherwise, then yeah, living in the 4-unit, living in one of the units and renting out the other 3, and only having one mortgage, they could be paying your mortgage and you could be living for free. Is that what you're saying?
That's one scenario, but I want to know more about the scenario if I just wanted to buy it and just
Rent it.
rent it all out.
Yep. You could do that too. That's just
Really?
buying an investment property.
Oh, and then
Yeah,
there's
with 4 units.
okay. So how would that work? Like,
So you qualify for investment purchase, right? They require 15% down.
okay.
So there's a larger down payment for investment properties
Okay.
requirements. And then you get 4 tenants.
Ah.
And you collect rent and it offsets your mortgage payment.
Okay, so I guess the question is if I'm a first-time home buyer, am I able to do that for a fourplex unit as well?
Mm-hmm.
But then I would have to live in it, right?
Oh, you're talking. Okay. I'm trying to.
Yeah.
So the question you're asking is, how do I get around buying an investment property with the investment mortgage, buying it as a primary and still renting it, right?
Somewhat.
Yeah. So everybody thinks this, and this is something really important to bring up.
That's why I want to ask.
It's a good question.
Yeah.
It's a good question, but you want to stay away from doing stuff like that.
Okay.
It's called occupancy fraud.
Oh, that's what it is.
Yeah. So you don't.
No, but what if I do?
People. Well, then it's different. That's different.
Okay.
Then it's a primary. I think that there is limitations, and that's something that I want to get back to you on.
Mm-hmm.
And this is again because I don't know for sure.
Right.
But I think if you live in one of the units, they don't allow you to offset to qualify for the loan.
Okay.
With the rents, but it can still be your primary residence. Yes.
Okay. Because I'm only.
And you can rent it out. However, to qualify for the loan, they're not going to give you credit for those rents.
Okay, because I guess what I'm asking you is because you said with the investment loan it's going to be 15%
down. So you're saying, how do I do 3% down, minimum down?
Absolutely.
And buy an investment property? That would be one of the ways, but
absolutely.
you'd have to live in it.
Yeah, and if I would have to live in it, I'm just thinking of the numbers. Like if that number wise, it makes sense.
Would it compute, right?
Yeah, right. Because I would live in the smallest unit,
and then rent out the other three, and be basically rent free for yourself. Right?
Yeah, absolutely.
Yeah,
right?
it's a good move if you're okay with living in a fourplex. You know.
Yeah, I mean, I could live in it, but I could like stay at other places, right?
Yeah.
Like, I don't gotta live in there all the time, right?
No.
Like I have my stuff.
If that's your primary residence.
Yeah.
No. So be careful with this.
Okay.
If it's your primary residence, you can't rent something else as a primary residence, or buy something else as a primary residence.
No, absolutely. Yeah, I'm just saying, like like
you can go visit people, yes.
Like just say I'm a young player, you know what I mean, and I just have different little spots I can go to. Like
you can couch surf all you want.
That's what I mean.
As long as your driver's license and your mail and
everything goes there, right?
And that's your main living. Yeah, you live there multiple. I think they call it 51%.
Mm-hmm.
Of the per year, 51% of the time you're living there. That's your primary. Because some people, they work in two different spots, right?
Yeah.
You have people that own in California and Nevada.
Right.
For instance. The requirement to call the Nevada house your primary residence is that you're there 51% of the time of the year.
Okay.
And then for lenders, underwriting purposes, they want to make sure that you're really doing what you're saying. So they're going to say, okay, where's your work? Where do you work?
Right.
Is it remote? Is it not remote? Are your W-2s and your pay stubs and your driver's license and all the documentation that we have on your loan file, are they this property? Because if that's the case, then that's your primary home.
Okay.
Right. They can kind of put that together.
That makes sense.
But yes, you bring up a good point, and it's something that is important to bring up, is that especially during COVID, when properties were easily accessible, lower interest rates, people were gobbling up investment properties.
Yeah.
And it usually was, I'm going to buy it as a primary so I can do minimal down, and then I'll rent it.
Right.
Which is illegal.
Yeah. So okay. Right.
But because they're trying to work the system. The reason why in primary residence is lower interest rate, lower down payment requirement is because it's less risk for the bank.
Because they know you're living there.
If you have two homes and you're living in one of them and you rent out this other one and something happens, you lose your job, you can't afford the mortgages, you can't get a tenant in that other home, that home's you're just going to let that one go easier than you would your primary, because you have to have somewhere to live.
Right.
So that's why primary residence is easier to qualify for. It's lower down payment requirement, less risk, lower rate.
Okay.
And so so people would take advantage of that. They'd try and buy a first time home buyer, like you were saying, minimal down, and then just use it as an investment property.
Yeah.
And they can get in trouble for that.
Okay.
Number one, the lender can call it due if they find out you're doing that.
Oh wow.
And then it's also, there's actually laws against it, like FBI type of, you don't want to mess with it. Like the fines and prison time.
Yeah.
So
but what if you have like a business, like, and then that's like that's your, like a home, like you said remote business type deal.
If you're working remote, then you just have to be in your primary residence 51% of the time.
Right. Exactly. Yeah.
That's still where you're getting your mail. That's still where you live.
Yeah. Okay.
So I mean, obviously it has to make sense.
Yeah, just because keep it,
I mean, it's only if you're blatantly doing occupancy fraud
Right, you're
that
just
it would.
literally not.
There's
ever
there's
there.
no way that they would be able
Like, bro,
to.
I can't help you.
Like you buy a house using first time home buyer down payment, primary residence financing, and then you close the loan, and then you immediately get a tenant in there, and all while you're just still renting the house that you lived in before, right? That's occupancy fraud.
Like it's blatant, guy. Like come on.
Yeah, and the other part is that what was big with these non-QM products and this different investor products that are coming out now, where you can buy an investment property without showing income.
Oh yeah.
It's called DSCR.
DSCR.
So debt service coverage ratio.
Debt service coverage ratio. DSCR.
Yep. And what that means.
I'm just re-highlighting it because it said no income verification.
Yeah.
So DSCR. We got to know about this concept right here.
Yeah, they're not verifying your income. They're verifying the income of the property to qualify for the loan.
Okay.
So let's say you have a large enough down payment,
Yeah.
and you're buying the home. The mortgage is going to be $2,000.
Okay.
Right. And the house is going to rent for easily $2,000. You don't have to show anything else.
Wow. So we would just need the down payment.
There's the down payment to make that mortgage work, and then the rent estimate from the appraiser when it gets appraised.
Wow.
The appraiser is going to say, yeah, this house rents for roughly this amount.
Oh wow.
And then the lender puts it together.
And then
says,
you said
okay,
it has
good.
to be 15%, or just whatever makes sense.
Whatever makes sense. DSCR is going to usually require a larger down payment because you have to make that work. Right. I think they even require 20. I think it might even be 25 to 30% minimum on that product.
Okay.
And it depends on the lender. Again, we have 65 different lenders. So sometimes when I say I think, right, it's always something. If people are watching, they can always ask a question in the comments. And as we continue to do these shows, we'll pull them up and start answering questions out of the comments.
Yeah, absolutely. Yeah. If you have any questions, go ahead, drop it on in the chat box, or you could even text the number 702-505-3297. You could text that, you can call that, and we will take your call live on air and get you pre-qualified live on air. That's the great thing about it,
Right.
So.
And if you want to look at some homes.
Yeah.
Wait a second.
I'm gonna do one step at a time.
Get pre-qualified first.
Get pre-qualified first.
What I meant is you don't have to go look at homes, right? But you would set them up on a drip campaign, right?
I would give them a tailor-made search of your homes that you want to see.
Yeah, just talk to them about what they're looking for. You can set them up auto email from MLS, right?
Yeah, as soon as you get pre-approved. Like, as soon as you get, we need to know your buying power. We need to know what you got to spend. How like that's what we need to do. I mean, if you want to work with me, you can work with a lot of people that you want to window shop with. That's cool, but if we have a certain type of relationship, then we could work in that sense. But
he's too busy. He's too busy over here doing shows.
Essentially, I like to make things happen. Let's make things happen. So. We're gonna get people pre-approved. I mean, pre-approved first, right? Before we even do it. Well, pre-qualification.
They can at least get a pre-qual. Will you send them a drip campaign if I have a conversation? I'm like, they sound pretty good.
Absolutely. Yes.
Okay. Cool.
100%.
So just a conversational. At least you'll get them an email going.
Yes.
Okay. Cool.
Yes.
And then we have to get fully pre-approved in order for you to take them out looking at homes.
Yeah.
Right?
And then when we go out,
because that way you got that letter in hand.
Yeah.
And then you can say, hey, we can put an offer in on this because I made you get pre-approved.
Boom. And then once you have that letter in hand, and then you make the offer, it's way stronger to have that already, your ducks in a line before we make the offer. Then the seller's gonna be like,
you got your stuff together.
You got your stuff. Yeah, I'm gonna go with you because this market that we're in right now, there's multiple offers going up fast. So, and I seen them go fast.
Vegas Life Radio.
Yep. See, that's Vegas Life Radio.
Life Radio.
All right.
But yeah, so we did a I told you that we had the radio show, right?
Yes.
App to Close, the radio show.
Yes,
so
App to Close. Yeah. App to Close.
We talked recently about some investors.
Okay.
That building a portfolio of properties. You asked me about the 4-unit property.
Mm-hmm.
Different ways that people can invest. Investors have way more options than they used to with that DSCR product.
So DSCR.
So they used to have to qualify with like their income. Their income, their debts, and it would be like a full doc,
yeah,
or a bank statement loan, or like any type of normal loan scenario, and that's cool and everything until you get so many properties under your belt and you're doing all the write-offs, right? This allows you just like a bank statement for self-employed. DSCR allows investors not to have to show their tax return to qualify to buy on more investment properties. Yeah. So that's cool.
DSCR. This is going to be the word of the day, or the product
acronym.
Acronym of the acronym of the day. Words acronym. Yep. DSCR loan.
Yep.
Okay. And when did this? Because you said that it changed, right?
Yeah. A lot of these products came out. So interestingly enough, like I said, I've been in the business a long time.
Yeah.
So in low rate markets, lenders tend to shrink their product sheet because they're not making a whole bunch of money on it. Right. When average mortgage rates were 2% and 3%, no lender wanted to play in the more risky markets. Like, why would they? They can just do a whole bunch of conventional and FHA loans, and just make their money that way.
Right.
When it gets rough, or when the mortgage market basically shrunk down, I don't know, down to like a quarter of what it was, maybe even less. And so when that happens, lenders have to get creative on different products that they'll offer.
Okay.
But they're also incentivized to do that in a high rate market because now the rates are higher. So people are willing to pay 6, 7, 8% for these type of products.
I'm sorry, something just went really weird over here. Okay, no. I'm sorry, I just lost train of thought.
No, it's all right.
No, it's just
people going to call us?
Yeah, so
702-505-3297.
Yes, call. Can I just call somebody from here? Let me just call somebody. Is that a
Yeah, you can call out, man. I don't care.
I can call out.
Who are you going to call?
Ghostbusters. Let me see. This is exciting. I'm just gonna see if I gotta put this up. Is this what I gotta put up?
Yep. That's as long as you're connected to Bluetooth to this, the Rode Point 2 or whatever.
Oh, we could do like crank calls. Hey, do you want to get pre-qualified?
Let's not do that.
No, it's not.
Don't say the company name.
Hello? Oh, wait. Hello?
You gotta make sure the audio source is Bluetooth.
Is it? It is. Isn't it? Is it not? I did, didn't I? Is it not?
We'll figure it out.
Hold on, I got
people that are watching.
I got a caller on the line. How is it not working? Okay. Hold on, bro. We got a caller on the line.
Tell him you call him back.
I'll call you right back. Wait, how do I do that?
See, I give you permission for running the board, and you can't make the phone calls work.
We didn't go through the phone call portion of the crash course. FYI, just to let you know, I'm not saying you're a bad teacher or anything like that. I'm just saying.
Disconnect from Bluetooth and connect it again.
Okay.
But go into your menu so you
can okay. Bluetooth. Roadcaster. Let's see. See, we should have done it.
It's your regular ass number, right?
Yeah. I'm gonna use my regular number because I got it memorized. All right. We're gonna get a caller live on air and pre-qualify him. Hello? Hello? No. No. Oh wait, hold on. Oh.
Hello.
There we go. Oh, let's do this now. Let's get this popping. Oh. Vegas Live Radio, you are live on air.
Hey, Vegas Live Radio.
Yeah,
Sorry
yeah.
about this.
Hey, Garen, how are you doing?
Good, Chris. How are you?
I'm doing amazing. How's your day?
Really well.
Cool, cool, cool. So you had those. You were looking at those properties that you had sent me, right?
Yes. Yeah, there's a couple things to say. So those properties, those would be different. So even some, I was thinking like the middle price point, like 600-700, and then maybe like $1 million one, like families.
You said the $1 million one. Wait, hold on. Why is the phone? Why is the connection?
Is it his connection or the Bluetooth?
I don't know. Is it? I don't know.
It's the Bluetooth.
It's the Bluetooth.
Turn
Yeah,
down,
the connection sound.
turn down your phone.
Oh, turn down my phone. See,
For what?
how about now?
No, it's still rough, right?
Hello.
Yep.
Yeah.
Does it sound rough on your end?
No.
Oh.
Oh, okay.
It doesn't
It's
sound
just
rough.
us.
It's just. Hello.
Yep.
Okay.
There's a dog on the line.
You said what?
I said there's a dog on the line.
Oh yeah, yeah.
Sound rough?
Wait, hold on. Let's see.
Okay.
I could barely hear you. So we're testing out this live thing on.
Yeah, what's that up?
I don't know why it's like sounding like that.
Don't know.
Don't know either.
We'll figure it out.
Yeah, we figured it out. What equipment are you using?
We're using this Rodecaster and cell phone on through there.
What kind of cell phone?
iPhone.
What year?
Okay.
2007? No, I'm just kidding.
No. I got the older one because it fit directly onto my console in my car.
All right.
So it was a custom one, I guess. So yeah, I don't know why, Garen. I don't know why your phone, like, I can't. It sounds like your.
Should we try?
Yeah. Say what?
We can't FaceTime.
FaceTime. Maybe I could do FaceTime. Hold on. Let me try FaceTime.
Can you do FaceTime on there?
Maybe I could do FaceTime. Hold on. Can I do FaceTime through here?
Yeah.
Will that work?
Yeah, the audio is going to go through the phone jack for sure.
Oh yeah. Hello. I can see you, but
Can't hear me?
yes, the audio is still just all jacked.
Audio size.
Oh wait, that's a little better.
Yeah.
Boom. Better?
Oh yeah.
Oh,
It's
it was his.
Okay.
Oh, it's way
My
better.
Bluetooth?
There you go. It's way better now. There you go.
We in here.
Oh, there you go.
yeah.
All right, Garen. We're here at GF Capital Mortgage. I'm here with Kevin. We are actually
Hey, Kevin.
What's up, man?
We're actually pre-qualifying people live on air, like and
Okay.
and to reiterate what a pre-qualification is, it's just a conversation.
Yes.
Right.
We don't
Okay.
we don't need any documents. We don't need any.
Not yet.
Okay.
Not yet.
That's a pre-approval.
That's a pre-approval.
I might have a couple pre-qualified conversations then.
That's
Okay. Shoot, man.
So let's make it happen, man. Like, cause
We're going to go over our 2:00 deadline here
Yeah.
for you.
Oh, we just gotta call
That's
her.
good you just called, actually.
Did you really?
Huh?
Oh.
No.
All right, let's make it quick.
All right. We're gonna.
Are you going to call me back?
No. We're making this
Yeah,
happen
all right.
right now, live on air. We're gonna get you
All right.
pre-qualified, or we're gonna have a conversation, and
Good
we're gonna
plan.
see what we can do.
Now they're calling.
All right, go.
Yeah. Make sure you call back.
No, we're not calling back. What are you talking? Oh yeah, everybody call.
No.
To us. Call
They
to us.
make sure they call back. Yeah.
All right. So,
All right, what's
so
your
as you look at, yeah, what's your question for getting
Yeah, talk to me.
pre-qualified?
Okay, so here I got just maybe 1, 2, or 3 questions. So the first question, we pre-qualify me, which I'm pretty sure we could do that last. The first one, I have a restaurant client that's looking to open up a restaurant.
Okay.
So is commercial pre-qualification okay too?
It's going to be a little more difficult on the fly because commercial is not
Okay.
something that we specialize in. It's something that we
Okay.
we have lending partners that do it, so we broker that out.
Okay.
Okay. But
Okay.
but yeah, so
So we
he's
can
trying
do
to
that
buy a
next then.
restaurant for like get financing for the restaurant. You're saying?
Basically, exactly, yes.
Okay. Let me see what I can do as far as answering questions. I know a little bit about how commercial works.
Okay, perfect. Okay, so, well, first, my question would be, so, one, what would be necessarily the process? He said he has an agent, but the agent's not really getting him what he needs. So
Right.
I was like, perfect. I'm about to go and actually talk to my people right now. So, boom, I think that would be something that would be really conducive.
Okay.
And then the next thing, I was looking into multifamily, so I was going to ask if you know anything about that or the pre-qualifications for that.
Okay.
And then after that, single family.
Okay. So with the commercial, let's start with that. So you have somebody who's trying to get into the restaurant business, purchase a restaurant, start a business, right?
Exactly.
So does he have, so with commercial loans, it has to do, so the difference between, I can tell you kind of the difference between residential lending and commercial. So commercial is going to be based off not necessarily your borrower or, your client's income. It's based off of the business plan or the income that the business may generate, right?
Oh, amazing.
So a lot of people will start with like a SBA loan, like a small business loan. To buy a restaurant, right? And if they're going to get private financing for commercial, then they're going to need to kind of see what the business plan looks like, what the business's revenue is going to be, and underwrite it that way. So that's pretty general. Like I said, I'm not a commercial lending specialist, so more residential for me.
Right.
But that's what I know about it. Yeah.
So, but there is products out there for it's called a small business
Association loan.
Association, and that's
some people will use that. And then you can also get from your large banks, just a straight up business loan. Right.
So, but that small business association loan, that's specifically tailored towards property, right?
It's property and business. And business. So if you need operating cost stuff put in there too, that it can be part of that too.
Is that something you guys can help with too? As well,
no.
Okay, I'm just.
Yeah, no, it's good. It's good that people know that.
Clarifying everything. Okay.
But what we can help with is getting you in contact with a few people. If you wanted to, text that person's information, we can get them in contact with some people that we know in the commercial industry. Okay,
perfect. What information do you need?
Just name, phone number, and what they're looking to do. Just a quick, just text it to Chris.
Yeah.
And then he can pass that on to me, and we can reach out to him and get him in contact with a couple of commercial specialists.
So, and then you had questions about property, right? Like certain properties and stuff like that. So, what are your financial questions with those?
The second thing you said was multifamily, right? So what were you planning for multifamily? Is that for you?
Yes, that's for me.
Okay. Do you already own a home?
Potentially, like my wife. Say again?
Do you already own your own home right now?
I do not.
Okay. So this might go with what you were talking about earlier on live.
You see how I segued that?
So he had posed a question, and let me just ask you if this is kind of what you're asking me. He had posed a question of, can I buy a multi-unit property with first-time home buyer financing if I live in it and rent out the other 3 units, right?
Exactly. Yep, that's the plan.
So I want to confirm that. Like I told you, I never advise if I don't know for sure. So that's something I can confirm and get back with you on. Okay. But I believe you can, as long as you are going to live in one of those units. When it comes to qualifying, though, from what I know on that product, they're not going to let you use potential rent from the other 3 units to qualify for the loan. They'll let you do maybe first-time home buyer financing, but the rent is not going to help you qualify like it would if you were buying an investment property.
So that wouldn't classify the DSCR loan?
No, definitely not. Okay. Because he's going to occupy it.
Let me ask a question. Okay, so do you think that it could potentially be smart maybe to go after, say, like a more unit property and maybe use like a business to finance that instead like for a real estate investment,
yeah,
and then maybe do that what we just talked about for the next one to kind of maybe hedge that, I guess, maybe? Or
I see what you're saying. You're saying, do I do like a, let's call it a 10-unit apartment, complex as a business?
Yes.
Again, I don't
And
deal
you
in that.
probably,
Mhm.
So
Right,
it would be I would advise that you want to
Okay.
look at both options. So
Okay.
definitely if I give your other friend the commercial guy's information after we get off this live here, then I would reach out to them and talk to them about
Okay.
that possibility.
Okay. Copy.
When it comes to buying an investment property for yourself, so
Yeah.
you're trying to kill two birds with one stone right now. Are you trying to buy your own home?
Yeah, definitely will. So yes, for sure. But also, I feel like I want the home to be Airbnb property.
Okay.
So still rental, and then I can go just rent a property I'm gonna live in. But I really want the first properties I own to be like revenue generating.
Right. Right. And as you know, Chris, Airbnbs.
The strict there's
Yeah,
really
yeah.
strict guidelines with
So-
I
Airbnb.
know.
So you're going to want to be with a
Yeah.
good real estate agent
Hey.
and broker that knows all about
Yeah.
those guidelines and where
Amen.
you can buy it and what the the
Mhm.
guidelines are with that.
Okay.
So yeah. So-
Just to add to that, just with the Airbnbs, there's really strict guidelines, but the guidelines are a lot easier when they're long-term Airbnbs, if that makes sense, like 30 days
Yeah.
or more. Like
Right.
so if you have,
Right. Okay.
Yeah, long-term rentals.
yeah.
I
So
know about that.
yeah. So and then for you, so
Long, short,
it sounds like you're more geared towards trying to figure out how to invest in real estate, right?
100%.
So you're renting now where you
Yeah,
live?
renting now.
Okay.
Yes.
And so you are okay with continuing to rent where you live and then maybe just
Yes.
buying rental properties.
Yes.
Okay.
100%.
Okay.
And get some better places to rent.
Right.
That
Right.
makes sense.
So just buying your own property is not necessarily a benefit to you at this point.
Yeah, and not to say that it's not. I
Right.
definitely am open to all options, but I think, that's just been my idea for a while, so that's what I'm
Right.
just kind of presenting.
Okay.
That
And
makes
then
sense.
does that mean you have so correct me if I'm wrong. So you have money to
Yeah.
invest in real estate and you're thinking
Yeah.
that maybe you don't want to use that money to buy your own home because then it's not like a
Right.
money maker, right?
Yeah, that's what my parents did, so I'm trying to do something different.
Okay.
you know?
That makes sense, and I think that what's it's devil's in the details, right? We don't want to get too
Yeah,
detailed
right.
on how much you have and all that on air, but
Yeah, right.
but I
Right,
would
okay.
like to talk to you after we get off the call and discuss what you have and maybe it's possible to do both things, right?
Yes.
And
Amen.
so because
Love that.
because buying a home for your where you live
Yeah.
is also an investment in some cases, right?
Amen. Yeah, 1,000%.
Because where you're renting, that's basically 100%
The
interest.
money
It's-
is out the lot.
Yeah.
Yeah. Exactly.
I mean, you have to pay for where you live, so you might as well own
Yeah.
what you live in. But
I can agree with that.
but we can talk
I like
about investment strategy.
Yeah.
We talked a little bit about it today.
Yeah.
Maybe land in manufactured homes or something. What do you think about that? Or is that something you
We
guys-
do manufactured home financing.
Yeah.
Land loans, not so much.
Okay.
Okay.
And
Okay.
so
Well, how about the ADUs, like
Yeah. What's that?
like if you want to buy a property that has a nice big lot,
Right.
and then
and you add
want-
an ADU to it,
add a 80. Do you guys do loans for those or
it would be based off the parent property.
okay?
Fuck yeah.
Right.
Okay.
So
could be
if
good.
you bought a home that had a large lot,
Mhm.
right, and it gained equity,
Yeah.
then you would do a cash out refi
Yeah.
to build an ADU. Right.
Yeah.
Okay.
But it would be based off that main property. You
Okay.
can't get a loan
Right.
on the ADU.
Oh, okay.
Right.
Okay.
Yeah.
It's not like you can
Right.
have a loan on your primary home
That gives you
and then
chills.
you build a shed in the back or an ADU in the back and then I want to get a mortgage
Yeah.
on that too because it's on the same
Yeah.
parcel of land.
Oh, okay.
Right.
Okay.
If you split the parcels, then it becomes two different properties.
Okay.
Right. But that's a whole different thing.
Oh wow.
Yeah.
This is really dope. Okay, cool. I mean, we're Garen, thank you for calling.
Yeah,
I will
yeah.
give you
course.
Kevin's number so you guys can chat
Okay.
as soon as
Yep.
we get off air. We went
Perfect.
over time a little bit, so
Okay.
I just
okay.
want to
Very
wrap.
cool. Thank you for the time.
Hey, not a problem. We'll reach out to you. He'll get you my contact, and then I'll reach out to you, and then your friend that wanted to talk about opening the restaurant. I do have some
Yeah.
contacts for commercial people too. So
Okay. So what I'll do
Perfect.
after
I just sent that to Chris.
cool. So as soon as we get off air, I'll connect you. I'm gonna just wrap up and close up the show,
Okay.
and then
I'll
Yeah.
be watching on this side.
All right, man.
All right.
Nice.
All right, peace.
All right, money. Have a good day, guys.
You
God
All right,
bless.
thanks, man.
Well, there you go. You get
Well, that was pretty cool.
That was pretty
So
cool, right?
if, hopefully we had other watchers that were watching.
Oh
that.
yeah, we did. We had like 40,000 people just looking.
Well, then hopefully that'll make them call to next week.
Because at the end of the day, it's like people just get a little anxious and scared just to get on live and just. But it's really fast. It's really
Right.
easy.
And it's not like we went over. I didn't say what's your social on the air or
No,
like how
no.
much money do you have.
Right.
It's just general to see if it makes sense to have an additional conversation.
Right.
Just kind of like breaking the ice, essentially.
Yeah. And guys, information is the biggest key to this, and this is the information hub. Any questions that you have about mortgages, financing, if you're planning to invest, you're gonna need these questions to be answered, or at least we can direct you to the where we can get the information.
Correct.
Right? So next week we'll be back on air, noon to 2. And I'm anticipating a plethora of callers just because they're gonna see this and they're gonna be like, "Whoa, that was
Hey,
really cool."
this is what they're going after.
Yeah.
Our first show was a little rough ski, but
Well, for sure. I'm just kidding. Yeah. Cool. Yeah. Any last things you want to
that's
say?
it. Just reach out to us. If you don't catch us on live, you can call our office here in Henderson, GFL Capital Mortgage at 702-529-2444. Let us know where you heard that from.
Yeah.
That you saw it on live here.
Yep.
And we'll take care of you.
And there you go. We're on out of here. Peace, love, and chicken grease. Yeah.